Hello and welcome to Quick Take TA here on Landy's Crypto Corner. Today is June 14th, 2024. You will have to forgive me. I am still just getting over my cold. But we are going to talk about Bitcoin today. We're going to try to keep this as a quick take. So around 15 minutes, 20 minutes is like not really a quick take, but I still call them quick takes. But we're going to check on Bitcoin as it did hit one of our key areas to the downside. And we're going to look at some potential setups that are starting to form. They're not ready yet, but they are starting to form on Bitcoin and Ethereum at least. And then we're going to jump over and take a look at some of the majors in the Rune coin space. And we'll probably end up talking about a few other things along the way here. Let's go ahead and look at Bitcoin. Bitcoin has hit the first downside target that we had spoken about, last week and even the week before as potential downside targets on any break below $69,000 and any kind of a break of this consolidation low structure that was coming in around that 66,300 on the lows. Last chance to kind of save itself would have been around 65,850 to this wick high at around 65.5. Now it did, to be fair, come down to $65,000 and hit our main target between $64,000 and $65,000. $64,000 is this close open here. This is the last lower high before the trend reversal. And then there's kind of a zone of support here. And we do want to see, and hopefully you do too, $64,000 to $65,000 as a target zone hold up. Because if it doesn't, Bitcoin is very likely going to come down and test this next area where we did see the higher low come in. And more specifically, I'm looking to the top side of these candles around $63,000, possibly a wick below into $62,000 as well. But that would be the next area. It would be a retest prior to, you retest the lower high before the breakout, and if it's going to retest the actual breakout itself, because price was being held down around 63,500 and $63,000 on a close, and then we finally got the higher low set, and we got a downtrend break above 65.5 here in one candle, and that was on the May 15th candle there. So while we do have one piece of criteria has been met, which is our target, our initial topside target between $64,000 and $65,000 here at the April of 2021 monthly swing high. We can begin to evaluate some setups that could form if this area is held. And this also does mean that there is the possibility of diving further down to test this lower high before the trend reversal at 64K. It's problems if price starts to break below there, in any significant fashion, taking out the breakout area here at 63,000, then, we would be looking, 61 to 62 initially, somewhere around the October of 2021 monthly closing high. And that's kind of a danger zone because anywhere below there, Bitcoin's in danger of possibly taking out this higher low structure, which would lead me to believe that we're in for some further downside into the March monthly and quarterly closing area. And this was March was a monthly and quarterly closing high, coming in at $58,800 to $59,000, depending on your exchange. And anywhere below there, I'd be looking for a run right back to the lows and lower, quite frankly. So that's around $60,000 at that higher low. As long as that is holding up on any kind of a daily, weekly time frame, I'm more biased for things to just go sideways and consolidate within this overall range before moving on to the next leg up in this bull market. So let's go ahead and take a look at the daily in terms of momentum real quick here, and then we'll come back and define some criteria for the upside here. On any closures in this Saturday candle above, $68,800 to $69,000, well, that would start to turn momentum back to the upside. Bitcoin did come down and get very close to testing the bearish control zone or the edge of the bearish control zone down here. Just as a quick reminder, that's currently coming in between our target zone between 64 and 65. $65,000 was tested yesterday. And in this case, 64, 400 to 500 is right where the bearish or the edge of the bearish control zone is here on the daily chart. And I would say that there actually is, I wouldn't just say, I'm going to say and tell you that there actually is bullish divergence in play. And that is if Bitcoin can set a higher low anywhere above 60,800, which is that higher low structure that started off the uptrend here. So this is the last RSI read that we have down here close to the bearish control zone. And it does appear as though, yep, Bitcoin did get its close in yesterday's candle below that on the RSI level. So we have significantly potentially significantly higher lows if this were to set a higher low, really anywhere above that 60,800 on a close and 60,150 on a wick, then we would get a drive of hidden bullish divergence, not regular bullish divergence. Regular bullish divergence would be forming in a downtrend on lower lows within this current downtrend, whereas this is from an uptrend. And it was basically kind of a hidden or prior trend kind of, or trend continuation. You can think about it in that way, or in most cases you can think about it. It's probably good enough for a bounce if Bitcoin can put in a low somewhere above that that area where it could throw that hidden bull div. So in this case, any closures back above in this particular candle, from this particular candle's high from yesterday at 67,322, well, that would start to paint at minimum a swing low, and definitely a closing low on any candle closures above 68,250, and then that would pretty much be locked in, and we would at least have a hidden bull div populating and very, very close to turning that pivot number on the daily as well. So that's one piece that I wanted to point out for Bitcoin on the daily. I also wanted to drop to the 12-hour time frame. As I mentioned in yesterday's video, the 12-hour is going to give you a nice heads up for what to expect on the daily. So, you get two 12-hour closures during the daily candle. So it is worth watching. Now, we have seen the expansion down into support here. It could still come down and test that $64,000 area, possibly even down to $63,500 to $63,000. Anywhere below there, eyes on. 61 to 62, somewhere around that October of 2021 monthly close. But in this case, we do want to see what the momentum pivot is here. The momentum pivot is going to be 66,800, and we would get an initial cross back to the upside here. You can see that it did try for an initial cross, and here's the criteria for momentum shifts on a regular stoke like this. You're looking for the first cross, and then you need to see follow through in the next closure. So when you get a cross, you'll get an updated stoke pivot. This updates with every candle anyway, but you'd get an updated stoke pivot. In this case, you'd likely see that momentum pivot be somewhere around wherever the low is set on a wick or a close. If it hasn't set a low yet, then it's going to be following price very closely. And then the next closure, you need to see that updated pivot number closed above to get both the K and the D read cross back to the upside. That would be your full-on confirmation that we are looking at a potential momentum shift for stoke. Of course, for the 12-hour, we would need to see closures back above to set a low. So you'd want to see a momentum shift, plus you'd want to see a low being set. And you could see that or observe that on Bitcoin's 12-hour on any closes above that same area from the daily at 67,322. And in addition to that, we could look at RSI. Is there a bullish divergence in play here? No. There isn't a regular in-trend bullish divergence in play here. There is some historical bullish divergence that is in play. And again, that's coming from that same area around that 60,000 150 to 60,800 zone. That would be a hidden bull dip because that is from the prior trend up, and we're currently in a downtrend. So, what's going to be more powerful would be to actually make some lower lows and get regular bullish divergence. That's not in play right now, and if this does start to make lower lows, you are going to see 64 and possibly under for Bitcoin. In this case, we're looking at really watching that 64 to $65,000 zone. So the April of 2021 monthly swing high down to this daily, and the 12-hour is going to be the same area, roughly. Well, actually, the 12-hour is a little bit higher at 64,215, whereas the daily is at $64,000. So I'm just going to stick with what I've been saying, between 64 and 65. Otherwise, we're looking down to 63.5 to $63,000. Anywhere below there, eyes on that higher low structure down there from the prior trend. That's going to do it for Bitcoin for today. There are a few other things that we can check on, though, in terms of my analysis as it relates to some of this stuff here. Nope, I don't want to do that. I want to bring that back. We need that. We can go to the local support and resistance zones. So one thing I do want you to note is we had marked off 67, that 67 area where this high is coming in. That just so happens to be the high over here. This was the high that was holding up price in this area at 67,272 there. And of course, where did it reject after losing it and closing below it on the daily? Well, it rejected right there at that high, and went down and tagged the next lower high from the downtrend before the uptrend formed. So just wanted to kind of point that out. And then we can move on to this chart that you're going to see in some servers, in particular in the extraordinals server over there, or the XO server. And this is one of the charts that I have been keeping track of over there with that team in my channel there. And part of what I want to point out here is we'll get rid of the Bollinger Bands. We don't really need them, but I'm going to quickly explain what this is. And then we're going to go take a look at ETH and possibly some Maroon coins. So what this chart is you see the breakdown from the highs here. We saw that there was the high put in, so that's marked. And then we have the breakdown area from the highs. Now what this is this began the trend breakdown, right? That candle was a higher volume candle on the way down. And of course, this is a downtrend. So on the downtrend, what we're doing is mapping out continuation areas initially, and that's using volume along with trend. You can also reference support and resistance zones, like we have the 67,243 instead of 272, because that was more relevant on this particular time frame, which is a 15-minute. But in this case, excuse me, what we were looking for was higher volume to come in on this breakdown from this green zone up here. This green zone needed to be recovered, and then of course the green line needed to be recovered to push up to the 71,400 to $72,000 areas, which was an equal high zone. But in this case, we're tracking just this pattern as it happens, the downtrending pattern as it relates to volume. If we were to zoom in here, you can see this was a nice high volume candle, so we marked the close to the wick low. If this is going to get continuation, we would expect the next candles to close under it. So we see one candle did not, next candle closes under it. We see another big zone of high volume, or another big candle with high volume rather. We mark this out as a zone from the close to the wick low. And then we can see when price bounced, where did it reject? Well, it rejected the higher volume candle above that it had just previously lost. It tries to go sideways on this high volume wick to close low, loses it, comes down on what I would consider normal volume for a larger move down. So I didn't mark any of these, but instead was just keeping an eye on that big daily zone around that 67,243 or 67,272, which was that daily high. The Bitcoin was trying to hold on to in that consolidation low range near the highs. You can mark either or. This line is subjective right here. But once it lost it, we saw it got under this particular line and then found this as resistance, and then tried to set a nicer higher, found a bit of higher volume, likely some longs getting washed out. In this case, it's spot. You're not really seeing longs washed out. These are actual buyers coming in on the dip. So in this case, we saw some nice higher volume, sends price sideways, and then drops through it. What do you expect? We expect volume to come in. Volume did come in. This was $66,000, and you may have mentioned, or may have heard me mention, you see that this also popped back up to the next high volume zone above it. So now when we see it starting to regain one of these red zones, what we're looking for is we're no longer going to mark any of the volume, because this was all just tracking continuation down and then marking off the high volume areas of interest. And in this case, when price mean reverts back through these zones, these are now going to be the areas that need to be flipped from resistance into support. And you can see and observe kind of how this occurred on the move back up. Of course, this was prior to the Fed meeting. It got a nice bounce, tried to hold in and around that daily and the lows of the consolidation lows zone that we had just pointed out. It found this area over here of high volume as resistance, and then shot through it just prior to the market open on FOMC day. Perfectly wicked into the top side of this area and got rejected initially, came back down and then popped above it, but did not pass the criteria to the upside, which was around 70,200. Tried to find support in this zone, which was the breakdown zone. Did not, so it came right back down, and you could see how it interacted with each one of these levels. Now this chart is posted in the Extra Ordinals server, and for those that would like it in some of the other servers, if you want, I believe there is some versions that I will have posted for you in there as well. But in this case, we needed to see the $66,000 held up, and I had mentioned that yesterday, or else we were going to get a run to $64,000 to $65,000, and that's actually what we saw the day before, and then in yesterday's candle, what we saw was $66,000. After this zone broke above, well, heads down, and then found its footing around $65,000. Now, this also had a nice high volume area, so that was marked. It did initially bounce up and find that area as resistance, bounced back up to 66,000, found the high volume area as resistance again, tried to hold in and around $66,000, and that's currently where it is. But as long as it's below this red zone, this high volume zone above it, it's more likely to keep testing 66, gets below. Then we're looking for, for it to head somewhere around, 65.8 to 65.5 again, anywhere below there. We're looking for it to run the actual $65,000 zone again. So we can actually just clone one of these and put this on there as well. So this is kind of what I'd be looking for. And then anywhere below $65,000. And what are we looking at here? We're looking at this next big zone that I have marked here. And this is one that we just talked about, $64,000 on the close open high that was put in just before the trend change, that higher low. And this is the top side of the higher low prior to it setting that higher low and breaking out into an uptrend. So that would be $64,000 to $63,000. So that's going to be the next area if we do see $65,000 breakdown. All right. So I'm already pushing the 20-minute time limit. My apologies. I'm going to have to label it not so quick take today, huh? All right, let's go look at ETH, because there is a setup to be had here. If ETH is going to, it did come down and hit our high area that we talked about from like the day before. It might have been the day before. I don't remember. It might have been Wednesday that I talked about ETH. But it has finally tagged directly at this high at right around 33.56 or 33.50 area, depending on your exchange. It could still drive down and try to test in for like 32.50 or so, right around this high. If it does close below there, then we start looking to somewhere around, 3,100 to the wick high here at 3,200 even. Anywhere below there, it's in danger of falling to 3K, back into the $3,000 rather, to basically $2,800 level. Now, where there is a setup forming is if it can deviate, if this can just deviate that 3520 zone and reclaim it. This is pretty aggressive expansion, to be fair, on ETH. It's not exactly like Bitcoin, but there is, there's a few more highs that it's got to get through on the way down if it's going to keep expanding down. But the setup is going to be this. If it can start regaining 3520, then we're already seeing the 12-hour shift around here. The 12-hour is pivoted at 3482. This is not the strongest signal I've seen. We also have red DMI down there, and we do have a strengthening downtrend. Maybe this will get some mean reversion or start to bounce at the very least more aggressively. Weekends have been pretty quiet lately, but if it can continue to close above 3482 and continue to, continue on the 12-hour and try to get back above the lower first, which would be right around 3,500 to 3,520, then I would be looking into somewhere around this lower high. So anywhere around, 3,560 to 3,660. If ETH can recover above 3,660, I would look right back up to that 3,700 to 3,725. Anywhere above there, but looking right back to its high side structure in and around 38 to 38 and a half. So that is to say, it's got to basically recover 3520 and then work its way up to test around 3560 to that 3660. Start seeing closures above there, eyes on 3700, 3725. That was the primary area that it was trying to hold as support. And then up from above there, I'd look for it to come right back into this consolidation range around that, 3,800 to 3,850. Anywhere below its current wick lows and the lower second standard deviation on this 12-hour, we're looking for it to not only just tag this 3550 to 3556 area, but come down to this area here right around, this is on the 12-hour, 3284 to this low side structure around 3200, and then that's also right around this high, and then from there we'd be looking around 3150 to 3100, so on and so forth, down to $3,000. So just keep a very close eye on it, because the setup is there. And one other thing that we can check on is that if it does manage to start pushing up above 3,500, you'll see the momentum indicator, the Stoke, which is a regular Stoke, not a Stoke RSI. So this is measuring close over close price action momentum. In this case, 3510 would do it. So as I want to see a recovery above 3520, and I'm having a tough time still. 3520 is the area that I want to see recovered, and it would fulfill the criteria for this to set up for a further bounce to the upside. Let's go ahead and look at market leader over here in the rune space, and that would be Dog. And what was the other one that I wanted to check out here? There was one other one. We're just going to do Dog as the market leader, so it's going to be indicative of what's happening in the rune market anyway. You're going to get the one-off pumps. Most of them are not listed on centralized exchanges, but Dog came down. It's coming into a daily compression, so it got it listed, came down, got its nice double bottom down here at about 0.002 cents, and then got a nice ripping move up here on the daily, put in its high just under a penny. Now it's mean reverted through a couple of the levels here and hit one of our main levels, which was right around its listing highs for centralized exchanges, and that's at the 0.057. So we did call this area out as a potential area of interest should the 0.066 level break down. It is looking as though it might try to break down from this level again. but it's not a guarantee. So let's go ahead and look at this. We did see it spike. It did regain that 0057. It spiked it or wicked through it and then spiked it again on the daily here, and then regained the 066 to the 074 level, and even got a nice wick up into the top side structure up here that I had previously marked at around that 008 level. Now, I believe I talked about this on Wednesday, is this is the area it needs to recover. Specifically, it's got to get above 0085. That is the daily upper first now. If it does lose the 0066 level, keep an eye on the lower first on the daily around 0066 to 006. Anywhere below 006, and it's likely going to run its lows again over here around the 0057 cent level, potentially all the way back down to the 005 cent level even. So we've got 0057 to 005. And, it's basically half a penny. Is the area of interest to the downside if it does lose around 006 cents. To the upside, any closes above 0074 cents would be back above the basis on the daily, giving us the look that it's going to go and run that 008 cent to 008.5 cent region again at minimum, and maybe even try for the 009 to a penny region up top and run its highs. Pretty simple setup. And again, you're seeing the 12-hour setups. This is not a failed setup yet, but it's looking as though if it starts to break down from right where it is right now, this could become a failed 12-hour setup where the 0065 cent region is needed to be held right now, and it is trading slightly above it, but it's gotta get back above this area and start trading back into the range, and preferably, the closer you see it to 007 cents, the better. And that's kind of where I'm going to leave things for this Friday. It's going to be an interesting weekend to keep an eye on price action. I will keep you all updated via charts in the various Discord servers that I'm in. If we do see any significant changes or if some of the downside targets are hit, and I want to make you aware of the next areas of interest, then I will be letting you all know. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with all of that being said, Landy out.